sales headwinds from a stronger dollar. We see real dollar strength today. The impact of on margins of a weaker consumer, concerns there Kering and Adidas highlight, and of course input cost pressures from inflation, plus taxes due to President Biden's Inflation Reduction Act. Are you as well concerned about these issues for earnings this season?
I mean, for me, the key issue absolutely is margins impact. And what is interesting is maybe not that much current margin impact, but future margin impact. Because what we're seeing is that current earnings have actually been a lot better than lots of people feared. We still hear from companies about underlying strengths and consumer spending. There's still some saving. Labor market is still strong. So current earnings is a lot better than lots of people feared. The big concern is what happens next. And we know what's happened next. Economy is going to slow, and it would be so much more difficult to defend margins. So margins is number one priority for me.
So you say, Marija, that things are basically going to sour going forward, and yet if you take a look at earnings expectations looking forward, we have started to see them come down. You can see that on the Bloomberg terminal. GTV Go is where you'll find our whole chart library, but they have not rolled over to the extent we have seen equities rolling over. There is a very big mismatch between those two lines. When do you start seeing those material downgrades, and do they just catch up to the equity market, or do equities further deteriorate along with those?
I mean, for us, the big decline in margin in equities this year have been multiple compression. So as I said, underlying earnings have been okay, and even now, I mean, I think it's a probably fourth earnings season or earnings reporting season in a row that analysts or market is really surprised of kind of underlying earnings strength. So earnings stories are still okayish. I mean, not fantastic. Of course, we're seeing kind of slowdowns here and there, but okay. What we see in equities is multiple compression, and that's your macroeconomic headwinds. That's your Fed absolute focus on fighting inflation and doing whatever they need to slow aggregate demand. So that's what equities responded so far. But underlying earnings, I mean, they've been robust so far, but there is no question that monetary policy works with longer lags than before, but works still. So we will see earnings contraction. So that's all that's coming, and that's all that makes me even more worried about equity outlook going forward.